crypto is now about to decouple from U.S. tech stocks. Many are talking about sell U.S. assets kind of behavior in the global markets. Do you think this is the moment?
Well, crypto over the long run is decoupled from U.S. tech stocks. I think what you have to look at is, are you looking on a short-term basis or are you looking over a longer-term basis? You know, over a short-term basis, you can see all types of different assets have rising correlations to each other. And in fact, if you look at the last few weeks under more market uncertainty, you've seen everything from stocks and bonds to crypto trading with higher correlations. But if you zoom out, you tend to see the kind of longer-term fundamental thesis of something like Bitcoin really drive it to behave differently than traditional assets. You know, the long-term correlation between U.S. stocks and Bitcoin is more like 0.2 or 0.3. It's a lowly correlated asset. And it's because what drives stocks, which tends to be things like higher growth, higher certainty, lower geopolitical risk, many of those things actually are kind of opposite drivers for Bitcoin. Bitcoin thrives when you have more uncertainty and are looking for something that's going to behave differently. So fundamentally, this should behave like an uncorrelated asset. And I think as we continue to see more time play out in this uncertain environment, you will see a dispersion between these assets.
Yeah, so Jay, what we're talking about here is crypto or Bitcoin as alpha, right? Uncorrelated assets and also returns. So directionally, tell me, right, if this tariff situation globally, right, doesn't resolve itself, drags on, or fingers crossed, gets worse, right? We can probably expect stocks to take a further leg down, bonds to go down to $2 as well, and for crypto and Bitcoin to continue going up. Would that be fair?
We would think over the long term, if this is the trajectory of kind of greater uncertainty around the world, that things like gold and things like Bitcoin should continue to go up. It is this type of uncertainty where people are looking for alternatives, parts of their portfolio that are going to behave separately from stocks and bonds. We've seen it in the flows. We've seen it in how investors are positioning. We've seen significant inflows into gold ETFs. We've seen significant inflows into Bitcoin. And this is all because people are looking for those assets that will behave differently.
So let me ask you, right? I mean, it'd be easy to sort of pin it on the president and the trade war, right? But this whole diversification away from traditional assets and into things like gold and also like crypto, right? Probably began 3-4 years ago, did it not? Or at least 2-3 years ago, right? Because a lot of people pinpoint Russia's most recent invasion of Ukraine and, how $300 billion worth of Russian central bank money got seized and is sitting somewhere in Belgium right now as a trigger for countries like China, say, to stop recycling their surplus into treasuries, or not as much, and more into things like gold and into crypto. I mean, that's fair, right?
Well, if you look at a few things, one is if you look at central banks around the world, a continued movement towards diversification beyond just holding dollars is something that's been happening for decades. So the switch from just holding dollars to holding gold to looking at other types of assets like Bitcoin is a trend that's been years in the making. I think if you take a step back, at BlackRock in 2023, we released our new framework for thematic investing called Mega Forces. And that was the first time we really identified geopolitical fragmentation as a mega force that is driving the world forward over the next several decades. This is materializing in a lot of different ways. It is geopolitical risk between countries. It is materializing in policies like reshoring in the United States. And I think directly related to that geopolitical fragmentation megaforce has been the rise of things like Bitcoin, as people see more destabilization in geopolitics, resulting in the need for more alternative assets.